I'm super excited about this one. I was just chatting with Scott Meadows. He's the head of BD over at Coinbase a few minutes ago before he's about to come up here. And we were chatting about, DeFi and TradFi and how it's all blending. And I think y'all are in for a wonderful conversation. So let's give Scott Meadows, again, head of Business Development at Coinbase, a round of applause.
All right. Great to see everybody. Thank you very much for having me. My name is Scott Meadows. I currently serve as the interim head of business development at Coinbase, and I'm incredibly excited to be here at the Futurist conference to talk a little bit about a vision for the world that we are heading toward that shows a convergence of the traditional financial system and everything that we have built as an industry over the past 15 years in DeFi that ultimately represents an opportunity for us to create better economic freedom, better access to financial services, and in a way that gets away from some of the history of what this industry has sort of touted itself as being kind of like the anti-establishment, fully decentralization, fully self-custody model. And what I want to present to you today is a vision that ultimately relies on the fact that this doesn't have to be an either-or binary outcome. It's not a, do we stick with the existing Byzantine system that is exclusionary and high cost and high friction, or do we move to a fully decentralized, fully DeFi, protocol-based financial system? And the reality is that, like everything else in the world, we're probably going to end up where the right answer is somewhere in the middle. And what I want to talk through today is a little bit about how I envision that happening. So in order to do that, the first thing that I think is important is for us to establish, let's take a big step back and think about when we talk about financial services, what exactly are we talking about? A lot of times in conferences like these, you're really focused on new innovations and new models, but you sort of forget, you get lost in the sauce, you forget what is it that we're talking about. So when we talk about financial service, the reality is that every activity that we are talking about today can be bucketed into one of two categories. The first is intermediation. So from an intermediation standpoint, you have credit where you have borrowers and you have lenders, but it's hard for them to find each other. So you go to a centralized institution like a bank to be able to serve as the connection point between borrowers and lenders. You also have liquidity. Same thing as borrowers and lenders, except it's buyers and sellers. And in that world where you have a marketplace, it's hard for an individual to find a buyer for a seller and vice versa. So an intermediary helps serve as the centralized clearinghouse for that to happen. As you think about all of the different intermediation activities that happen in traditional finance, that's what it boils down to. And then the second piece is infrastructure. And with that, you have custody. Somebody has to be able to safeguard assets. You need to be able to focus on clearing and settlement, which helps ensure that when a buyer and seller are matched, that you actually have delivery of those things. And then finally, payments. How do you move value between two unaffiliated parties that don't know each other and don't trust each other? Well, the reality is that all of this only works through trust, and that trust in the existing system is enabled through regulation. But that has a consequence. When you rely on a model where trust is achieved through regulation, that leads to intermediaries having to manage that risk through process, compliance, and ultimately warehousing a lot of capital to protect their shareholders. When you have that, you have investors that have to earn a return on that capital, which makes perfect sense. But the consequence of all of that is it just drives up cost. So you've got an entire network of intermediaries who are only self-interested, and their only job is to create a return for their shareholders. But by doing so, it increases costs to end users across the entire system. That leads to economies of scale kicking in, further consolidation, which leads to more barriers to entry for new innovation, new developments, and ultimately limits access to the global population. If you look across the globe, and I know many of you know this already because it's part of what motivates us as innovators in this industry, the vast majority of the globe is actually underserved from a financial institution's perspective. They're underbanked. They don't have access to the same services that many people in the developed markets do. And a lot of the reason that is true is because of this model where trust is imposed by regulation, and that increases costs and makes those institutions incredibly selective in who they want to serve. So how do we break out of that cycle and move to a new paradigm? Trust through regulation, as we talked about, is cumbersome, it's costly. It creates an incredible amount of concentration and power into the hands of a few institutions globally. If we move to a system that is built on these protocols, that is built on DeFi, that is built on a decentralized mindset, you impart that trust through code rather than through regulation. That helps things be much more convenient, much cheaper, composable, contiguous, and helps build a community around all of the different sort of market participants that you have in a way that you can't do today in a fragmented user world that is controlled by a few central intermediaries. So what does this actually look like in practice? When we think about decentralizing the financial system, one of the things I think I want you guys to remember is we don't have to replace everything that we have built as a global economy over the past several hundred years, but it is going to evolve. And how is that going to evolve? Well, let's go back and look at the two fundamental activities that we talked about, intermediation and infrastructure. On the intermediation side, you have credit creation. What are some of the innovations that are being driven today that are help facilitating this? Decentralized on-chain identity, open source risk management protocols where you can actually decouple the credit risk decisioning from the individual institution and make it open and permissionless in a way that is much more democratized and helps enable greater access to credit globally and greater opportunities for individuals and lenders to be able to earn a return on their assets by lending them out. Capital formation is another one. Think about today, if you're in a new company that needs funding and you're looking for investors, the existing system is incredibly complex and closed off. You don't have access to the entire marketplace of potential investors across the globe, but crypto helps enable that. Fractionalization of real-world assets, ultimately the ability to issue globally, automation of capital formation through token sales and smart contracts and straight-through processing, all of this stuff is going to drive a tremendous efficiency and help increase economic activity and give entrepreneurs the opportunity to raise funds and help build their projects. And then finally on liquidity, as you think about where we are today, liquidity is still concentrated in a handful of institutions, but it's not globally available. We don't have a true global marketplace. As more and more funds move on chain, as more assets move on chain, as we develop the paradigms for real-world tokenization and security tokenization, we're going to move towards a world where we ultimately have one global marketplace that is much more efficient, provides much better pricing and availability to all of the buyers and sellers that are out there, and that's going to be enabled by the infrastructure that we are building as part of this industry. On the custody side, this is sort of self-explanatory. It's an entirely new way for people to safeguard their assets, but I think the important thing, again, to remember is this isn't a centralized custody versus self-custody question. The reality is that we're creating a spectrum of new potential solutions that fit any number of different market participants and help service their needs, their constraints, and their own requirements. Clearing and settlement, similarly, if you have now a system where you have, for securities, derivatives, overall sort of like global capital markets, enormous institutions that have incredible amount of capital requirements necessary to facilitate all of the global clearing and settlement for those activities, it's incredibly costly. It takes time. You're looking at T+1, T+2. All of that is an inhibitor to global efficiency, capital efficiency, and the ability for people to actually deploy capital in the most efficient way and drive further innovation. And then finally, payments. We spend a lot of time in the stablecoin space. Coinbase is building a tremendous suite of new capabilities to help businesses facilitate global payments and settlements using stablecoins. And that's going to completely remake the way we think about value transfer. And again, all of this is about driving down costs to the end users and businesses, which helps free up that capability to push that cost towards innovation. So this model is what we operate today. All of the individual market participants plug into an intermediary, and then each of those intermediaries has to then plug into a network of other intermediaries. But each one of those boxes on the screen has to generate a return for themselves. They're all they're profit-motivated businesses. And all of that cumulative effect adds up to an inefficient marketplace that drives up costs for everybody. So the future that I think we are headed toward is one where rather than you think about intermediaries and private balance sheets that drive all of that facilitation and liquidity, each of these platforms will convert into front-facing protocols that enable them to plug into DeFi global marketplaces for credit, for liquidity, for clearing and settlement, et cetera. We're all gonna run on a common infrastructure that is efficient, it's low cost, it's transparent because it doesn't rely on regulation and process and capital to protect individuals because it runs on code. And that code is transparent and it makes the entire system function more efficiently. So, last couple of things I'll say. In terms of what Coinbase is doing to help facilitate the development of this future, we've rolled out a number of new products over the past several years and increasingly over the past couple of months that really adopt this model of being the front end that enables our users to be able to plug in and access these markets in a seamless, transparent, and dead simple way. Whether that's through our direct integrations for enabling people to lend or borrow assets on chain, whether it's through our DEX trading capability where people have access to trade millions of assets at the tip of the, at their fingertips as soon as they become available in DeFi markets. And then finally, we are building out a core capability that will enable other financial institutions, brokers, banks, and fintechs to be able to offer those same services that we offer at Coinbase to their users. The whole world is moving on chain, and as much as I would love every single person to be a Coinbase customer, we know that's not practical. And what we're enabling is the infrastructure that other institutions and banks and so forth can leverage what we've built at Coinbase to allow their customers to access these markets. And then finally, last thing I'll say is we're also helping enable, a little bit tough to read that slide there, I recognize, but we're helping to enable capital formation on chain in a totally new and innovative way through the full life cycle, leading from company formation and protocol development through private token sales, cap table management, all the way up through liquidity formation by listing on our exchange, and then finally building in utility for those new projects and protocols, both through our custodial platforms and our non-custodial platforms in Base. So we at Coinbase have now the full stack that helps enable all of those market participants, buyers, sellers, issuers, investors, and so forth, to be able to leverage that common infrastructure and drive more value away from those centralized institutions and into the hands of the individual market participants. So, in closing, I want to thank you all for your time. I encourage you, think about a future where we are not adversarial with the traditional financial system, but we are enabling a revolution and an evolution of the way the existing market works that will ultimately drive better economic freedom and better outcomes for individuals and businesses alike. Thank you very much.